Good evening. Thanks for having me here. I'm glad you could all make it. And my name is Brian Keel, and I'm the Managing Director of New York Ventures. It's the, as my colleague earlier mentioned, it's the state's economic, we're part of the state's economic development agency, Empire State Development. We're the venture capital arm of it. And the New York Ventures organization is new. It's meant to house and sort of organize all of the venture capital activities that the state funds. And as Sharon outlined, we try to cover a spectrum of the early stage funding requirements from pre-seed to seed to Series A. And within the earliest stages, we use a fund-of-funds model, which Sharon manages, and she just gave you a description of some of those programs. And I'm here to give you a little more background on what we're doing on the direct investment front. So we have, we were allocated $100 million, of which a small piece was put towards tech commercialization, but the rest we're investing directly. To give you a little background on that. So the overview is this, the New York State Innovation Venture Capital Fund is the formal name of the pool of money that we have. And it was established in 2014. Originally it was $50 million, but before we wrote the first check, it went up to 100. So that was very good news. And where we focus is on filling gaps in the venture capital marketplace, particularly in the seed and Series A stage of funding. So we are looking to, we're multi-industry, so we focus on life sciences, clean tech, advanced manufacturing, materials, software, all of the venture investable categories, but we're probably skewed a little more towards the harder sciences and life sciences and the materials than some other funds might be, but we will do software as well. In terms of our Series A investments, we look to do a check size of around $1 million to $1.5 million, and our seed investments are around $500,000. We do have matching fund requirements, as all of our funds do. It's 2 to 1 so for every dollar that we're financing into a company, we're looking for the private sector to do $2. So about a third of a round is what we target. So for seed, it's companies raising $1 to $2 million for their seed round, and for Series A, it tends to be $3 to $5 million. That's sort of our sweet spot. And we do save and reserve capital for additional rounds of funding so that we can continue to support the companies as they grow. A lot of these harder science companies do need additional rounds of financing before they hit revenue, and we reserve 2 to 3 times our original check so that we have that money available and can continue the funding. In terms of the things that we're looking for, we are balancing, we do balance the economic development goals of the fund along with return. And so we look at many of the same characteristics that any investor is going to be looking at for a successful investment. We look to see what the market opportunity is for the product. So is there a large and growing market for this? Is the product that the company is, or solution the company is putting forward, really addressing the pain point that a client, that their clients might have? Do they have any proprietary technology or processes that allow them to have competitive advantage and have some barriers to entry, or is it going to be commoditized as soon as they can get it to market? We want to fund companies that have some lasting value and can build and grow and really create a lot of economic activity in the state. So that's important to us, is technology being the basis of competitive advantage. Then we look to see that they've gotten far enough along where there's enough meat on the bones for us to invest at the stage we're doing our direct investments. If they're too early, maybe better suited for one of our fund-of-funds programs, or they may still be, grants may be a better source of financing for them in terms of what they're looking to do. And then in terms of financial consideration, well, I'm moving on a little too quickly. The management team obviously is key, that they've got the right team or can acquire the right team to execute on the plan that they've got out there. That's a great idea is one thing, but if you don't have the team and the right team to move forward with it, it's not going to move forward, get where you want it to go. In terms of financial considerations, we want to finance things where the companies have 12 to 18 months of financing once we finish this round. It's very time consuming to raise money, so we don't want the founders and the company to be out every 6 months having to raise money. So we want to go into well-funded rounds with very good partners and a syndicate. Who's the investment syndicate is important to us. We have the ability to write additional checks, and we're looking to spend time and effort helping the company grow, but we want a syndicate of investors that can do that as well. We're very aware companies at this early stage need care and feeding, and we see that the angels and the institutional investors that play in this space really add a lot of value, and that's why we like to partner with them and require those matching funds. And then we look to see that the financial return that we might get is commensurate with the risk we feel we're taking at the stage we're going in at, and that the milestones that can be achieved with this money are going to take that company from that Series A to that Series B with a fairly reasonable certainty. So those are the main characteristics we look for, and we want to be a meaningful owner because we do have some requirements. We have a requirement to stay in the state of New York for a certain period of time. We really feel that for asking that, we ought to be significant to you, you ought to be significant to us, so we want to have a significant ownership stake in your success so that we're going to want to help you and you're going to feel that we're an important partner in the effort. And so far, out of this last 2 years, we've closed on 7 investments. The first 4 of which were in the New York City area, but the last 3, I'm proud to say, have been in the upstate area. The majority of our pipeline now is in the upstate area. It's the first 4 were software companies, but the last 3 represent a whole range of businesses from energy storage to materials to software. So we're playing in all the industry sectors, and we just had our first life sciences investment approved at the most recent Empire State Development Board meeting, and we hope to close that soon. So for more information on our funds, our programs overall, refer to our website. But I'm happy to answer a few questions now, but also I'm going to be around for another hour or so, and we'd be happy to speak to people after.